Good morning, everybody. Today we're going to talk about tax rules for Canadians living abroad. It's a hot topic. A lot of people, the boomers especially, I guess, as we're retiring, we're seeking warmer climates. And this is looking at it from a Mexican perspective, going from Canada to Mexico mostly. Although the principles that you're going to learn here could apply to any country. I focus on Mexico and one tax treaty so that you could get comfortable with it, and because the request was made, and because I live part-time in Mexico as well. So it's going to be an overview. We're going to understand residency and tax obligations abroad, as Canada taxes based on residency. And here's our agenda. We're going to introduce two Canadian tax rules for expats. We're going to try to determine your residency status, or at least understand how to determine your residency status, and tax obligations for non-residents if you decide to break ties with Canada and become a non-resident, and tax treaties and foreign tax credits that you are eligible for or are not eligible for, and just some practical tips at the end of the video, moving abroad and tax implications. So here's our introduction to Canadian tax rules for expats. So an overview of the Canadian tax system. We're taxed on residency, as I said. That's where you reside, where you have your ties, bank accounts, homes, if you have a younger family, children, those sorts of things. So tax obligations for residents in Canada, you are taxed on your worldwide income. So you have to understand the implications of residency, not citizenship, residency. US taxes on citizenship, Mexico and Canada tax on residency. And tax obligations for non-residents. The benefit of being a non-resident, I suppose, is that you're taxed on your Canadian income only. Okay, and we'll talk about differences in tax obligations. So key differences for residents versus non-residents. Okay, as we know, residents of Canada, we have to report on our global income, our worldwide income, regardless of where it was earned. If you're a non-resident, you only have to file and report income earned from Canadian sources. Okay, so it makes your tax obligations very simple. And the distinction between the two will have, impact on taxes that you pay, and it'll also have income on benefits and tax credits. And the importance of understanding your tax obligations, I'll just say it right up front: compliance. Revenue Canada is very punitive. If you do not comply with taxes, you get a fine. You get a fine for not filing your tax return. Sometimes you get a fine for if you don't file it electronically, those sorts of things. And then not only do you get a fine, you get interest, and it compounds in Canada. It can be very expensive. So also understand about to not be in a double tax situation, you've got to know the tax treaties. Okay, and if you look at Article 1 of the tax treaty with Mexico and Canada, that'll help you understand a little bit. And it is always, the onus is upon the taxpayer to stay informed. So here's where if it's just too much for you, you're not in a financial, isn't your cup of tea, or you don't want to worry about taxes and that, seek out a professional. It's worth it. It'll be the best money you ever spent, okay? And they're going to help you get the maximum benefits and the minimum taxes, and avoid those penalties and interest charges. So how do you determine your residency status? Okay, here's the criteria. Physical presence. Now, I took this from Article 5 of the tax treaty, just so that it'll help you understand between the two countries whether you're going to have to pay tax in Mexico or not, or, ties to Canada. A permanent establishment, okay? A place of management, a branch, an office, a factory, a workshop. Now, this all sounds like business, but let's just focus on permanent establishment. Are you permanently living in Mexico? Do you have a residence card? Have you applied for citizenship? Are you permanently residing in Canada? Or are you in Mexico and are you studying as a student? Are you working as an English teacher, which would be tax-free in Mexico, but taxable in income if you're still in income in Canada if you're still a resident? Those sorts of things. It can become very convoluted. So residential ties include connections in Canada, such as a home, family, and personal, personal effects, gym memberships, driver's license, BCID, medical insurance, those sorts of things. Okay, they will impact the residency classification. And Revenue Canada does look to your intention. Are you intending to leave? So maybe your first couple of years you're trying out Mexico and you're thinking, am I leaving Canada or am I not leaving? Sit down with your professional, take a look at your portfolios, and do a cost benefit analysis. Okay, so that you can plan your exit from Canada and pay the minimum taxes. Okay, so the significance on residency on, tax implications. So residency status is crucial because it tells you, okay, am I just paying tax in Mexico? Am I just paying tax in Canada? Under the tax treaty, am I paying two taxes? And how do I claim back from each country so that I'm not being double taxed? Okay, so in Canada, you're taxed on your global worldwide income, Canadian tax laws. Okay, and all of that, you're also subject to case law, court cases, because they do set law and precedents in Canada. It's up to, for cryptocurrency as an example, but others as well. Taxation of non-residents, okay? You're only taxed on your income in Canada, which can reduce your taxes. And if you need help, Revenue Canada's Form NR 73, it's an 8-page form questionnaire, very detailed, step by step. Go through it. Revenue Canada does say you're required to follow that form once you've cut ties with Canada or you're planning to cut ties with Canada. Or they pose it as, do you want more information? Talk to your tax specialist before filing the form and make sure doing so is in your best interest and that you're answering the questions correctly. Common scenarios for residency determination. Okay, what if you went to Mexico for 2 years and you want to go home to Canada? Okay, so returning to Canada, if you left in the first place and claimed non-resident, now you're returning back, what are those tax implications? Was it less than 2 years, so you were still deemed a resident of Canada? Was it, there's all sorts of factors they'll look at, okay? It's not always just black and white. So if you're working abroad, does that affect your residency status? So for example, if you were teaching English under the JET program in Japan, the tax treaty dictates that Japan takes the withholding tax, there's no tax in Canada. That's the way they filed it. So it's easy to go in, it's easy to come back. In Mexico, if you're working in Mexico, the Mexican government will want their portion of tax. Okay? And if you've stayed after your 6-month permit, check with SAT. Make sure you have your RFSA, that's the equivalent of your social insurance number, and you're filing your taxes correctly. Now, you think, well, I still have to file my taxes in Canada. I'm going to get double taxed. Well, what you do, you file your Mexican tax, then you get the final notice of assessment, you file with your Canadian taxes and show the taxes that were paid. You get what's called the foreign tax credit, and you don't pay double tax. So thus, you have to, again, back to residency. What are your ties in Canada? Can you walk away? Revenue Canada is going to look at it. They're going to look at, okay, well, you said you moved to Mexico and you want to be a non-resident, but you're back here every quarter for business meetings or for, maintaining your home so take a lot of time and make sure, or take enough time and make sure. Are you resident? Are you non-resident? Tax obligations for non-residents. So taxable income for non-residents, you're subject to taxes on specific income. So you have to have that tax awareness. For example, rental income earned from Canadian properties is taxable for non-residents. And you have to report to Canada Revenue Agency in Canada, file a tax return on Schedule 776 to your rental properties. Okay, employment tax. So if you're earning employment income in Canada, we have a lot of people that go across the border from the US to Canada. You have to pay taxes. You have to pay CPP, you have to pay EI, you have to file tax returns, okay? Well, if you're a U.S. citizen, you have to file a U.S. tax return as well. And again, you file the reciprocal tax returns and you claim the foreign tax credit in Canada under the tax treaty, so you're not paying double tax. And dividends, investment income from non-residents, you would have to claim Canadian income tax on. And the filing requirements and deadlines. So filing requirements overview, not only report your Canadian source income, report only your Canadian source income. As a non-resident, you report the income from Canadian sources. This could include investment income, rental income, and if you received any income from foreign sources, you do not have to report it on your Canadian tax return. Again, the date doesn't change. Your taxes are due by April 30th for the previous year, meaning a January to December fiscal year. It's calendar year, and you have to file it by April 30th. And you have to pay the taxes by then, or you're going to get charged non-deductible interest and potentially a penalty for not filing on time. Okay. Withholding taxes on Canadian income. Okay. Non-residents, you are going to be subject to withholding tax at source, maybe, depending on the type of income. Normally, as a Canadian, you're subject to tax under Part 1 of the Income Tax Act. As a non-resident, you're subject to Part 13. The general rate of tax you're going to pay is 25%, unless the tax treaty says otherwise. Okay? So dividends, rental and royalty payments, pension, old age security, CPP in Quebec, pension, retiring allowances, RRSPs, registered retirement income fund payments, your RIF, your annuity payments, and management fees. Okay, so this is income that would be subject to withholding taxes. Now, understanding the tax rate, what you're permitted to do by Canada Revenue Agency as a non-resident is you can elect either under Section 216, and this election basically is a non-resident. They can make standard tax deductions, instead of the regular 25% rate, or, agreed upon rate, I guess. Sorry, instead of the standard of 25% rate that is usually automatically assigned to a non-resident. Or alternatively, under Section 217 of the Income Tax Act, a non-resident can make an election to pay at a tax rate deduction provided for in Part 13 of the Income Tax Act for those certain parts of income, types of income, especially the pension income. You want to pay a lower tax rate, because you have basic exemptions and you're not going to be taxed on, depending on the province you're in. I'm working more from a British Columbia perspective, your basic federal and provincial exemptions. So tax treaties and foreign tax credits. So definition of tax treaties, it's basically a formal agreement between two countries to help avoid double taxation. And the Canada-Mexico Tax Convention Act of 2006 is available on the justice.gc.ca website, and it applies to income taxes imposed by both countries. It's worth a read, it's worth understanding, and you could always prepare a list of questions to ask your professional, or there are seminars available. You can always call Canada Revenue Agency. I don't know that they'll give you tax information, as that could come with a liability. So you're better off building that relationship with your tax professional. And the benefits of tax treaties again, less withholding rates, exemptions for certain types of income, and to eliminate the double taxation. And the impact on individuals is crucial, okay? So that you can optimize and know what your tax obligations are and pay the minimum amount of taxes. So the interest generally, under general rules off the Canada Revenue website, you receive income that is credit to you, exempt from Canada withholding tax if your interest income is payer is unrelated to you. Okay, but there's a calculator online with Canada Revenue Agency and contact them. Okay, if you receive OAS during the year, you probably or may have to file the old age security return each year, as well as your personal income tax return. So how do you claim your foreign tax credits? Okay, so first of all, assess your eligibility. Now, there is a 90% rule, so I wanted to use this example for you. If 90% of your earned income is in Canada or more of your worldwide income, remember, because Canada is based on worldwide income. So this would be you're a resident again. 90% of the federal and provincial refundable credits can be claimed. Understanding the process, you have to understand the process. For example, if you leave Canada, it's important you tell the CRA you left because non-residents aren't eligible to receive the GST credit or the child tax benefit. Okay, including those payments from related provincial or territorial. Tell them, because if you don't tell them till a year or two later, you can imagine the tax bill you're going to have, okay? Plus interest. Plus, you may get caught under the anti-avoidance, and why didn't you tell them that you had left the country? Okay, very hard to appeal. And then accurate documentation. You want to keep your records clean and straight. It'll save you time. It'll save you money. Even if you're going to a tax professional, as long as your records are in order, it makes less work for them. And CPA professionals, they charge by time, they charge by the expertise. And if they have to organize your records for you, it's going to cost a bit more. So avoiding the double taxation, I alluded to this earlier. To prevent those unfair tax burdens on individuals and businesses. I'm using businesses here in the sense of a rental schedule, the 776, and there's a business schedule, the T2125. So if you're down here working as a fitness instructor, or or if you're working online remotely. Now, I just met with Immigration Mexico. If you are working after the 6-month period remotely from Mexico in Canada, you will have to pay tax here. Okay, you have to register, get your RFC, your social insurance number equivalent in Mexico, and you will be paying tax on that income here. Okay, so now what? Oh no, I'm going to pay tax in Mexico and I'm going to pay tax in Canada. Well, let's take a look at the tax treaty. So it's based on residency. So now you're a resident of Mexico. You're working as a fitness guru, you're working as a yoga, a mental health specialist, an accountant. You're working remotely, you are going to have to pay tax here. So you'll file your tax return. When you get the proof of filing or the final notice of assessment that we refer to in Canada, you include that, and then you file your Canadian tax return and you claim the foreign taxes paid so that you get a foreign tax credit, and it's offset against your Canadian taxes, and you don't pay taxes both to Mexico and Canada. Okay, now the hope is that the tax treaty will eliminate double taxation. It may not always be the case. Practical tips for managing taxes abroad. So, as mentioned earlier, the importance of accurate records, they're crucial. Okay, not only to be compliant with the tax laws for your preparer to save you money, and if you're ever audited. And if you have to pull that information together after the fact, it's a nightmare. If filing returns and deductions, the timely filing of your returns, the claims, optimizing tax benefits, attach a calendar for that year in case you're required to say, okay, when did you go to the country? When did you come into the country? Those sorts of things that they might look at in determining your residency. Okay, responding to inquiries, again, if the tax authorities call, you have it right there. Less stress, less penalties. Now, a lot of people say to the accountant, okay, here, just take this, deal with this for me. And it is costly. It's peace of mind. But if you can maintain your records and deal with the easy, requests of sending information and that, if you're unsure, go back to your tax specialist to make sure you're sending the correct information. Okay, so definitely if you have good record keeping practices, you have less errors, okay, during tax season. And that will always save you money, penalties, interest. The complexity of tax system, it is very complex. And with these bilateral or tax treaty arrangements, especially for expatriates, the unique regulations and requirements are always changing with what's happening in tariffs and that, across North America. I'm not sure that we're going to see some changes. I don't know if I should use the word retaliatory taxes or, it's very unstable right now. But depending on where NAFTA shakes out, where the tariffs shake out, we may see changes in income tax in both countries. Well, in all three countries, actually, Canada, US, and Mexico. Importance of compliance. Again, we don't want penalties. We don't want interest. We don't want to be charged with anti-avoidance or tax evasion, just because we did not know. The onus is upon the taxpayer, the burden of proof, phone an accountant when in doubt. Maximizing tax benefits. You saw where you get to claim your basic exemptions, but if you leave the country, you're not entitled to the refundable tax credits of GST and child tax benefit, but you are entitled to non-refundable tax credits, such as your basic exemptions, your medical tax credits, dental receipts, education tuition, depending on where it took place. Okay, so keep that in mind. And just for peace of mind, having an expert there, that's their expertise. You get to do what you want to do. If you're a yoga instructor, if you have horseback riding ranch, if you are an artist, musician, whatever, you get to focus on what you want to do. The onus, the burden, again, is upon you. There's lots of law changes, so we're going to watch. And because the Canadian government is prorogued right now, there are some things that are sitting there. Capital gains issue was a hot one, 50% versus going up to the 2/3. In the general rule is tax changes have to go through royal assent. And we saw this year Revenue Canada challenging that and saying, no, you have to pay these. Talk to your tax expert, your tax lawyer. It's just really strange times in Canada with government being prorogued and legislation not properly passing, and then government bodies trying to enforce that legislation, I suppose. Seek legal advice, seek your CPA's advice. We've talked about the importance of compliance, interest penalties, and be aware of tax law changes. That's where, you have to know court cases, and cryptocurrency is a good one. Canada Revenue Agency says it is up to the taxpayer to keep up to date on the tax courts and what's happening. So the conclusion, importance of compliance, I think we beat that one to death. Understanding residency, you can use that NR 73 to walk you through, and don't file it, to get a feeling for what you're going to have to do to determine. Take it to your specialist to go through with you and explain it to you, and utilize your available resources. A lot of the websites of CPA firms have overviews and changes and upcoming changes of what to expect and what to watch out for. Review first, write down your questions so that when you go to your tax professional, you've done your homework and you're not overpaying for very good services. But if you have any questions, or if you have anything else you want to see on income taxes for Canadians, just email me, let me know. I'm going to be doing more. I'm going to be doing tax returns when you emigrate, when you leave Canada to another country. I'm going to do a session on that. I'm going to do a session on the rental schedules, the 776, and the business schedules. I just love to hear from you on what you would like to do. Now, just a note, if you like, please hit the like and subscribe button. I'm not a YouTuber, I'm an educational person, and I'm just trying to earn enough to pay for my software. And I'm retired, so it gives me a sense of purpose and something to do. And we'll talk soon.